Hello guys and welcome once again. This is Billy FS and in this video I'm going to show you how to do a complete top-down analysis using Nasdaq as a case study. And by the end of this video you should be able to do your own top-down analysis and arrive at entries, right? So if you haven't liked and subscribed, make sure you do so to help us grow the channel. And if you have any questions, you can leave them in the comment section and I'll come and attend to you. Let's get straight into the video. Now, if you want to do a top-down analysis, we want to start from the higher time frame, right? We are day traders, so top-down analysis starts from the higher time frame, like the daily time frame. Other people can start their top-down analysis from the 30 minutes time frame or the 50 minutes time frame. Those are either scalpers, right? Or the position traders can start their top-down analysis from the weekly time frame or the monthly time frame. But since we are day traders, we are going to look at the daily time frame to start a top-down analysis. So what do you do first? First of all, when you open the daily chart like this, as I have over here, you want to look at the current trend of the market, right? The current trend of the market. So if you look at this market over here, where is price boarding towards, right? Those who like to draw a trend line can draw a trend line from here to here, and you can see that the market is respecting what lower highs, right? It's making lower lows and respecting what lower highs. So in this case, it is actually a downtrend. If you want to trace it with a path, it goes something like this. Okay, so you can see that price is printing what? Lower lows. So with this ideology in your mind, it means that when you go to the lower time frame, you are going to look for opportunities to what? Sell. So you can get buy opportunities, but you should know how long you should hold those buy opportunities and the potential areas that they can what? They can reverse on you, right? So if you want to do a top-down analysis, let's start. The first thing that you want to do is that you want to focus on the most current candle over here, right? The most current candle. Let me use this. I want to focus on the most current candle, right? So you can see that the most current candle is what is bearish, okay? So understanding that overall we are bearish and the most current candle is bearish is all that we need to what need to do, all right? So we take a trend line too, we mark the high of the most current candle, we extend it a little bit like that, okay, just like that. Then we take the horizontal line and we close it right in the middle of the most current candle. The reason why I'm doing this is because I want to what find supply and demand in the most current what area of the price. The supply and demand is going to be located at the tip of the what at the tip of the candle. If you have watched my previous video on how to find supply and demand or how to trade supply and demand, you will see that I explained exactly the reason why we find supply and demand at the top of what candles or at the bottom of what candles. So after you are done doing something like this, you move on to the what to the lower time frame. But you have to have in mind that the higher time frame is what is bearish, so your trades are going to be in line with the what with the higher time frame. So let's go to the 2 hour time frame and let's check. Okay, so on the 2 hour time frame, we can literally see what the market is trying to do. Okay, it made a high, then it made a low. So this is the high of that daily candle that we do what we have around over here. So you want to mark an area of supply around that daily candle, right? You want to mark an area of supply around that what daily candle. So what did I say supply and demand zones are? They are just bearish and bullish and engulfing candlestick pattern. So in this case, since we are talking about supply, it's just a bullish candlestick that has been engulfed by what? A bearish candlestick. Okay, so the last bullish candlestick that was engulfed by the bearish candlestick and which caused the break of structure, right? Like this. Please, you pick them at the tops. Don't pick them in the middle of what? In the middle of price. Sometimes the market is going to use the one in the middle, but you have much more, you have less headache, right? Trading from the extremes. That is going to help you a lot. If you get a lot of experience later on in your trading, then you can see that maybe I'm going to try to what take trades from the middle of the what the range, right? But use supply and demand at the tips of what candles. So for instance, if you're making higher highs like this, and you want to trade from a demand, don't trade a demand that is in the middle of the charts here, okay? Trade from the extreme. I know that sometimes the market is not going to come to the what extreme, like maybe you'll be expecting something like this. This is not going to happen, right? Market is just going to use the one that is in the middle and move away. Okay, if that happens, don't worry. It's a missed trade. Missing trades is part of what trading. You don't have to be worried about it, right? Don't care about the one trade that you have missed. Just care about the 10,000 trades that are yet to come. Okay, that is very, very important. This will help you become consistent in what you do. So now that we know that this is the area of supply on the daily time frame, we take down what time frames, right? We still move down time frames because we cannot trade on the 2 hours. We only take entries on the 50 minutes or the 5 minutes as what as day traders. Okay, if you want to be a swing trader, then you can go for the what the 2 hour time frame, right? So you want to dig down time frame to see what is happening around this area so that you can make what informed decision. So now let's move on to the 1 hour time frame. Now on the 1 hour time frame, you can see that the price is what is printing lower lows. Okay, it came here, printed lower high, then it made a lower low, right? So at least what you can anticipate from this area is that price is going to make a pullback. Price is going to make a pullback into the what into the daily supply before it moves down, right? Price is going to make a pullback into the daily supply before it continues the downtrend. If it wants to what continue the downtrend, okay. So this is literally what you must keep at the back of your what at the back of your mind. Very, very, very what important. Now there are situations, or it is possible that price will not retrace after it reaches this area. It just passes through like that, okay, and moves away and go and mitigate something else on the higher time frame. We don't know that, but our focus is literally what around this area. So that is why we cannot what leave limit orders when the market comes to this area. We have to what wait for some kind of confirmation on the lower time frame, like maybe the shift in market structure, right? The market comes here, a shift structure, then it pulls back, then you buy, sorry, you sell around this area, then you target the lows that is sitting right here. Okay, so that is basically what you need to do. Now, at this point, this is the highest probability thing that can happen on Nasdaq. You wait for a pullback to this area, then you wait for confirmation, then you sell. All right. Or if you want to be much more aggressive, since we are anticipating that price is going to pull back from this area to this area, we can take down time frame, like maybe 30 minutes time frame, then 15 minutes time frame. If you are doing that, you want to see the market structure within this leg so that when it fails, you can buy to this area. You want to see the market structure within this leg so that when it fails, we know that the pullback is what is going to happen. Then you cannot buy to this area sitting right here. For that, you move on to the 5 minutes time frame. Move on to the 5 minutes time frame. So you can see that the market structure has not fold yet. This area, the price has not been able to break with. It is facing some kind of resistance. So at that point, you do what? You wait. So high, low, then we break. Right after we break, after the pullback, then we can buy back into into this area. Then when the market comes back to this area, we can wait for another confirmation. Since we know that this is a daily supply and the market can retrace, if it does something like this, you wait for the pullback, then be sure the market down here again to continue the downtrend. So that is basically what top-down analysis is about. Letting the higher time frame guide your decisions. Okay. Now I want to show you something very, very simple. Instead of starting from the daily time frame, you can also start on on the weekly time frame. It does not change anything. Just going to give you more insight on on the higher time frame, right? So let me move to the weekly time frame and show you something. Okay. So now on the weekly time frame, what do we see? Let me remove this line, this horizontal line. Now we see that the week also closed bearish. So what do? We used a vertical line, sorry, use a horizontal line, then we do what? We mark the high of the week. Okay. We mark the high of the week like that. All right. Then we use the vertical line, then we mark the middle of the candle. Okay. Where's that vertical line? We mark the middle of the of the candle. Okay, like that. Then you move on to the daily time frame. So it means that this time you are starting from the from the week. So you have to take into consideration the weekly supply. What is the weekly supply? The last bullish candle before the before the sell, right? So you can see that this is the last bullish candle before this sells that is sitting right here. When it happens like this and it is too big, we can take the extreme from here. This one is experience, okay? Sometimes the market is not going to come to the extreme because this one is the whole other block. The market can just what come within if without reaching the extreme is going to what is going to drop and leave you, right? So this is what you can anticipate on the weekly what time frame. So we know that from the weekly time frame, we know that price can what retrace to this area and come back to the weekly supply, or the area where sellers were sitting, the area where the sellers started moving the price down for the rest of the week, right? So we know that sellers are active around what around that area. So if you move on to the let's say the 2 hour time frame, you move on to the 2 hour time frame or even a 1 hour time frame where you see this market structure clearly and price is not able to retrace from here and continue the downtrend and it breaks above this area, then we wait for more confirmation, maybe a retest around this area based on the market structure. Then what we target this size that are setting what right here. It is not something that has to be difficult. There's something very easy. Just mark the highs and the lows of the candle. Use vertical lines to what? Mark the middle of the candle. Move down time frame. Look at the extremes. Just mark them. Wait for the price to get there. Wait for confirmation. Wait for the right session. Do risk management. Enter. Do trade management and what? And leave the market to do what it has to what? Do. Very simple, not complicated, and very what? Mechanical. So guys, I don't want this video to be so long, so I'm going to leave you here. If you have any questions, you can leave them in the comment section. There's a lot that I want to teach you guys. I want to teach you guys. But if you don't show, interest in what I'm teaching you, then it becomes very difficult for me to what continue. So guys, please like and subscribe to help us grow the channel once again. Love you guys. BDFS out.